We'd like to welcome everybody to our Innovation Rally webinar. My name is Brian Ritchie, and I'm the John and Kathy Martin Vice President of Innovation and Associate Provost here at the University of Notre Dame, and lead the Idea Center. The Idea Center, for those of you that don't know, is the central point for innovation and entrepreneurship at the University of Notre Dame. And there we do, at the Idea Center, we do commercialization, including licensing, startups. We also do education there. We have a master's in entrepreneurship and a minor in entrepreneurship. And we also reach out and connect with the community in many different ways. And one of those is to do these innovation rallies on home football weekends, where we invite engaging and interesting speakers to come and talk to us a little bit about their experiences in entrepreneurship and innovation. And today we're very fortunate to have a very exciting speaker who I'll introduce in just a moment. I should mention, by the way, there's a lot of pressure on all of you that are attending, because at this point, our record for home victories is perfect. We've never lost a game when we've had an innovation rally. So if we lose this one, it'll all be your fault, and we'll follow up with you later about that. Just kidding. Anyway, we're really excited today to have our speaker with us. But before we get started, let me just mention a couple of the ground rules. Normally we would have this in person and do this over lunch, but as you can see, given our COVID environment, we're doing them online. Obviously, when we start to hold these in person, again, we'd hope you could attend. But in the interim, because this is a webinar, neither we as the speakers nor the other attendees can hear or see you. So if you have a question for us, you need to use the Q&A feature within the Zoom app. And then what we'll do is we'll spend time in the last half of the webinar answering your questions. I will say that if you use the chat, we also will not be able to see that, or may see only parts of those. So make sure that you're using the Q&A in order for us to get to the speaker. It's now my privilege to introduce Nitin Pachisia, who is a founding partner of Unshackled Ventures. He successfully built businesses while on a visa here in the United States. He's been here now since 2005. Prior to Unshackled Ventures, Nitin ran finance and strategy for edtech startup No, that raised over 90 million of funding from top VCs, including a very impressive list: A16Z, First Round Capital, Floodgate. No was acquired by Intel in 2013. Before No, Nitin immigrated from India to work at Deloitte, where he worked on helping tech startups with growth, exits, and strategic initiatives. And he now lives in the San Francisco Bay Area. So welcome, Nitin. It's great to have you here, and we really appreciate you spending a minute with us. Let me start by just having you introduce yourself a little bit. Tell us a little bit about who you are, how you got where you are, and then we can talk a little bit about Unshackled Ventures.
Yeah, I think you did a better job than I would introducing myself. So thanks for that. Happy to be here. Obviously, like you said, doing it in person in South Bend would be much better, but this is the next best alternative, so we'll take this. Like you said, I grew up in India. Growing up, had no idea where I would be when I'm 40, and so it's a lot of sort of small decisions and pieces falling the right way, which led to where I am. And so just kind of adding to what you said, starting Unshackled Ventures was also one of those. You see a problem and you see a certain opportunity, because from your vantage point, that problem presents an opportunity to create a massive business. And that's kind of the synthesis of being an entrepreneur. Most people will see a problem and whine about it. And some of them will have ideas to go fix it, but they won't do anything about it. It takes the rare few who see the solution, but also see that there's an opportunity to build an economic business here. And so we were lucky that, by my background as an entrepreneur who is on a visa and started a company when I was on H-1B, had to hear from 24 attorneys telling me not to quit my job because I'm going to have to leave the country, and which led to just looking for the ways that exist myself. Now, the challenge is, if every entrepreneur spends as much time as I did understanding immigration, we'll all become immigration specialists, but there will be very few companies. because that takes a lot of time, and that time is not best spent on learning immigration. So that was kind of the inspiration point to say, raising money from firms that you mentioned, they bring a lot of resources on. They amplified our operations quite a bit. They helped a lot with recruiting, helped a lot with design and business development. But it was kind of fascinating and disappointing at the same time to see that nobody had really taken on the immigration aspect, which is so personal to an entrepreneur. If you are an immigrant, there's a few things that are just different about you. One, you may be dependent on visas, and visa dependency then comes with employment dependency. Two, you have left your network behind in the home country. You've come to the US, you're kind of starting your network all over again. And now, when you're at a university like Notre Dame, you've done a lot of things right already. You've embedded yourself in a phenomenal ecosystem. It's a very supportive university. But you look at, once you go beyond the university, you're now in your work environment. And if you're not working in and around startups, you don't have that specific startup network, the VC network, and other entrepreneurs who are building high scale companies. So we kind of looked at that as this is a significant inefficiency that certain founders have to deal with, not all. And if we created a product that appealed to these entrepreneurs, could we create a phenomenal venture fund? And that was the starting points of Unshackled Ventures. And so what it's evolved into is we're now investing from our second fund, about $35 million under management. We do a few things and stay disciplined to just those things. Number one, we invest at pre-seed stage, which is pre-product, pre-revenue. In most of the cases, we're incorporating companies with the founders. The reason for this stage is immigration is the highest need at this stage. When you are graduating and you have questions about, I'm going to be on OPT. What do I do? Do I have to go join a Google or Facebook because they will sponsor my H1? Or you're already working and you have a work visa and you're asking yourself the question, how will my startup support this visa? Because every attorney tells me my startup cannot sponsor my visa. So navigating those things are at their peak when you're about to quit your job or graduate and start a company. So that's how we kind of picked the stage and then built our muscle around the second aspect of it, which is access to investors, customers, talent. That's really what helps you build your company. So, those are the things we specialize in. We invest, we take care of your immigration, which often includes hiring founders at Unshackled or structuring your company in a way that they can hire you and sponsor your visa. We have in-house immigration counsel who do all the work. So founders are not paying anywhere from $10,000 to $100,000 in legal fees for their visas and green cards. And the third thing is just opening doors for founders so they can meet customers, investors, and talent that will help accelerate their company.
That is such a fascinating story, Nitin. I'd like to dive a little bit into your timeline and then come back and dive more deeply into Unshackled. But if you think about the time that you were at Deloitte, I'm assuming if I got it right, Deloitte, then No, then Unshackled, right?
That's right. There was a startup in between. Yeah. So No, and then an e-commerce startup, and then Unshackled.
Oh, so two of them there. So as you're in, my first question, and I know that there'll be a lot of people listening who'll be interested in this. You're in a big company. You even mentioned that the company is supporting you. It's the one that sponsored your HB1. It's a lot of security. And now you're going to leave and go to a startup. Walk us through how that happened and your thought process, and maybe if there were others involved in your life, how they felt about it, and how did that happen? Tell us the story.
Yeah, I would say my risk appetite is not average. And so I don't recommend this much risk appetite for everyone to follow this only if you can swallow big gulps of risk. A lot of things, as I mentioned in life, in my life, have been a product of, and if an opportunity comes by, am I going to look at the upside or the downside? And just being son of an entrepreneur, having, being an immigrant, having taken risks, I am I first evaluate the upside. And if I see that there's great upside and a manageable downside, I will take that risk. So taking the startup job after Deloitte. So even within Deloitte, for example, for 6 months, I worked with big clients, the HPs and the Brocades of the world. And I got bored of that in 6 months. I was like, this is not fun. This is not why I joined consulting. So I started a practice to focus on startups within Deloitte. And now that would not have happened if I was with Deloitte anywhere other than Silicon Valley. So luck plays a big role in that. But when I started that, I was given 6 months by my partners that in 6 months, if we don't see adoption for this practice, you're going back to serving big companies. It's like, okay, I'll take that chance. And that practice took off, which is how I learned how startups work, what happens. Most of these were growth stage startups, so Series C and later. Through that exposure, one of my clients was Chegg. Chegg's founder, Osman Rashid, started his next company, No. And so I knew him from Chegg. He knew me from Chegg. And he asked me, look, we made a ton of mistakes at Chegg, which you're helping us fix. Can you run finance and strategy for me at No so we don't make the same mistakes and we're always ahead of the curve? Again, that was, as you said, a risky call because as a startup, every 6 months, there's a question of, do we have enough money, right? And Deloitte is a secure job. My practice was taking off. But the upside of joining a startup at the ground floor was too much to leave behind. Also with an entrepreneur who had made mistakes and therefore is less likely to make the same mistakes again. And so higher odds of success. And I took that. My wife obviously had a role to play. She had to accept the risk that's coming. It was soon after our first daughter was born, so there was that risk. But it played out in a big way, right? Because building No with Usman was one of the best MBAs, and I don't want to discourage anyone who's going through an MBA at Notre Dame, but that was an MBA that I was paid to go through and build phenomenal relationships, learned a ton, which then led to seeing an opportunity, which became my first startup, right? It wasn't like I was looking for startup ideas. Most of the times when you're looking for a startup idea, you choose second pickings, third pickings, right? But just going through the process of building No, discovered something that was an inefficiency, saw that today technologies exist that can help us fix this. And a big part of that trend in 2012 was social data analytics, right? Social profiles gave us a lot of insights and we could use that to make e-commerce better. So I started that, and then, like I said about Unshackled, we saw the inefficiency in building our companies and entrepreneurs around us. So throughout this journey, what you're seeing is just keeping an open mind about what else is around you, what are the big problems that people are dealing with, and is there an opportunity to solve those problems and build a big business? That's really been the calculation. The mitigation of that risk has always been surrounding yourself with the best people. And so I would say the biggest accomplishment for me in my life has been that I've chosen the right partners in life and work. And without that, I would not have, none of my efforts would have gotten to the scale that they did.
I love that. I was just thinking as you were talking, how important that network is, the people that you assign, you connect with that help you move from one place to another place. If it had been you just leaving all on your own to start No, would have been a lot more difficult. I mean, you took a tremendous amount of risk, but at one level you had someone there you knew and trusted who you'd worked with before. And I think that's a big lesson to take away in terms of who's in your network and who are your mentors and who are your advisors and the people that you connect with both in your life and in your business. So you're going along, you've done No, you've done this other startup, and now you've recognized this opportunity with Unshackled. How did you get traction? How did you get started there? And tell us a little bit about how it got formed and in your early fundraising days, kind of what you ran into. Did people immediately buy the thesis or did it take some time for you to convince them of what you were trying to accomplish?
It was pretty binary, to be honest. And, we conceived the idea of or I shared the idea of no with my now partner Manan on the evening of March 31st. And that was my cutoff because I was building a startup with myself on a visa. Manan, who's a US citizen, started a company with an H-1B holder and building a separate company. And we had both worked together at No, so we knew each other. We had mutual trust and respect in each other. And so when I told him that I'm going to shut this company down, Trimble was the e-commerce company, and I'm going to focus on the next 6 months to see if I can create a solution. And here's the framework. So I shared that framework of Unshackled with Manan, and he calls me on April 1st and he tells me, you want to do this alone or you want to do it together? And that was the beginning of now 6 years, and we think this is a partnership for life, and we'll always keep doing it. And so that was the starting point. From April 1st of 2014 to actually closing the fund in November and announcing it, that's a really fast journey to raise a venture fund for two guys who had never been venture capitalists before. So the reason it worked, though, I think the reason it worked is the opportunity was so obvious, but at the same time, it was a white space because no other VCs were going to go through the efforts of the operational aspects of employment and immigration and building a team that can handle immigration. It's easier to whine, tweet about it, criticize the policy. All of those things are much easier than actually doing something about it. And so when we went into testing this with entrepreneurs, we got a phenomenal response. So effectively what we did was between April 1st and May 15th, we formalized a framework of how this solution should work. May 15th and 16th was TyCon, which is a conference of entrepreneurs, immigrant entrepreneurs mostly. And so we figured that's the best place to test if entrepreneurs are going to buy this product that we're offering. So we tested that, and it was also the place to test it with some of the most conservative angels that you will meet, as we call them, Indian uncles. They are phenomenal investors because they are very careful with what they're investing in. And so, if we could get some of those investors to say this concept makes sense and you will be able to invest in tremendous entrepreneurs by doing this, that's what told us there's legs. And then we raised money over the next 6 months. And it was binary in the sense that people either believed or didn't believe. Like, we didn't get a lot of, when you see this kind of traction, come back to us. It was either, this makes perfect sense, here, take my money, or I don't understand why someone would not be able to do it themselves. And for that, we just said, you know what, we're not going to spend time educating you on why entrepreneurs should not spend time on immigration, but on their business. You should learn that on your own time. And we moved on. And we're very fortunate. A lot of the people who believed in us are people who are not necessarily immigrants, but have made money with immigrants, either as co-founders or by investing in immigrants. They see the value of what an immigrant entrepreneur brings to the US. They see that immigrants have phenomenal grit. They have a creative way of thinking, which is different simply because you grew up in a different environment. You're coming into the US, so you question a lot of the norms. And sometimes you get so baggaged with norms that you don't think creatively. You just always assume you have to pay an insurance premium through your employer. You don't think, why is employment necessary to pay insurance for my healthcare? Right. Because you've just accepted that as a given in life. You come from somewhere else and you start questioning, why can't I just buy insurance directly like I did in India or China? Why can't I pay for my cell phone plans different from my phone as I do in the rest of the world? So those frameworks give you just a creative way of thinking of technologies, business models, ways of doing things. And so for us, it was, I would say, among the easiest fund one raises. We also wanted to keep it small, which helps because it was easy to sell the story that we're not trying to get rich on this fund. We're not going to be getting paid at all or much. And this is about proving that the concept works, which is an approach we take very seriously in our investing as well. The first money that a startup raises is not about building the entire product. It's about testing the core hypotheses on which you're building the startup. And that can be done with a smaller amount of money, which is why we're such big fans of pre-seed capital versus raising $3, $4, $5 million out the door. Before you raise $3 million, because you're raising it to invest in building the product, do you even know that product is required? By who? What problem is it solving for them? How would it sell? What value does it create? And therefore, how much of that value can you charge in the form of price? There's so many things to answer. And you can do a lot of that today with a $500,000 to $1 million of pre-seed raise. So we did the same thing as a venture fund for ourselves. And then once we had that proof from fund one, we went to raise the second fund, which now gives us 4 years of investment capital, which is what we're investing from now. The next fund we raise will be larger because we've seen that this opportunity needs to scale. Yeah. Today we're investing in about 12, 13 companies per year out of about 2,000 opportunities that we see. Wow. We know that this is scaling. We know we can invest in 15, 16 companies per year. It is still a services business. And so we're not going to boil the ocean. We're not going to go to the 200 companies per year like YC, but it's still very selective, but it should scale. And so that's how we think about our fundraise, and the story just either it sits with you or not. And if it doesn't, we're not trying to educate you on it.
That's a great, you said something there that I thought was really interesting. Most VCs that have been through this know that fund one raise is the hardest. And you said that you just wanted to keep it small to prove the concept, but which meant that it's probably not going to sustain you in terms of a salary. So how long did you have to go before you were able to kind of create a business model that made sense with Unshackled? And how would you advise others that want to get into the venture capital world, either through the analyst, associate route, or by creating their own? Just what are your observations on that?
So my personal playbook is on just picking career trajectories is understanding what you want with the next opportunity that you're going to take. Like, what is your number one? It's almost like single issue voting is like single issue job selection. So when I picked my first job with ABB, I passed on 40 job offers to pick the 41st with ABB. Because my single issue was I didn't want to be behind a desk. I wanted a job that is going to give me an exposure to a lot of different kinds of businesses, different locations. I grew up in India in a very insulated environment. I only knew one thing, which is how businesses work in India. And so ABB gave me that opportunity where my job was to travel throughout Asia Pacific to ABB's many locations in Asia Pacific and work with the local business units to help improve their businesses, which is what better way to learn a lot of different aspects of an enterprise business. And so that I took with knowing very well that I'm not going to retire at ABB. This is a learning curve, but it gave me my one thing, which helped me then get my job at Deloitte. I didn't have to interview at Deloitte. I didn't apply for the job. Deloitte found me because they saw the work I was doing at ABB, and they said, we need someone who can do this for our clients at Deloitte. And the specific role they gave me appealed to me for my next thing that I wanted to accomplish, which is, okay, I'm kind of stagnating at this one enterprise. Now, can I take this and apply it to a lot of different enterprises and learn even more? So for me, it's been about being open to new opportunities, not kind of just saying I'm comfortable in this space and I'm going to stay here. Being open to becoming uncomfortable again. Discomfort is a great motivator because it pushes you to solve for that discomfort. And so just did that, 5 years at Deloitte, building that practice. And again, discomforts of building a practice. You got to recruit from within. You're selling a lot to startups who don't have big budgets versus, say, selling to Visa and Gilead is a very different ballgame. So I think if there's an advice in any of this, it's simply identify what's important to you at this moment or in the next opportunity you will take, and be prepared to pass on other things that do not give you that. Don't just take it because you need a job. It's okay to get uncomfortable. That discomfort, right? So, with Deloitte, then going to Know, I was earning pretty well, and then deciding to start a company. Again, you're entering an uncomfortable zone. Living in the Bay Area, with children, it's a different financial calculation at that point. If I was by myself, sure, you can cut your costs in a lot of different ways, but that financial calculation now means that there's a finite personal runway. And so whatever I do, I have to figure out a way that I accomplish that before I run out of the personal runway, because I don't want to put my children on the street. And so, so a lot of the work that I did to start my company was to do customer validation, customer discovery while I was still at the job at Know. So using my kind of the free nights and weekends time to be calling customers, right? Adjusting my schedule at Know such that I'm not falling behind on work at Know, but I can use my early morning hours to call potential customers on the East Coast. And I can use my nighttime to build whatever I was building, to recruit and all that other stuff. So I did a lot of that discovery work while staying in the job, because my personal runway is not getting affected. I'm still earning money. And so, the bank balance is still staying positive. But the day I quit, then now it's a ticking meter, right? Its bank balance is only going one way. And so it was a calculation, needed a buy-in from my family that, they are willing to go through this discomfort with me. And again, I'm very lucky that I have a family that supported me through that entire journey, all the way down to getting to credit card debt. And then, just when we were there and we were about to, on desperation mode, things started picking up at Unshackled. So you just kind of have to plan. And if you find ways to just stay in the game long enough, things work out, assuming you're doing the right thing. So, but I will caveat it with, I do not assume that everybody's risk appetite is the same as mine, right? I take inordinate risks in the right situations. I would not encourage everybody to do it because it is stressful.
Yeah, no, absolutely. Again, a fantastic story, Nitin. I'm really impressed with what you've done and what you've built. One of the things I want to dive on a little bit with Unshackled, I'm not sure people realize that it's not just that you invest in immigrant founders, but you actually help them through the process of getting an H-1B visa. Maybe explain a little bit, what is an H-1B? I'm sure there's a lot of people that don't know what we're talking about here. And then why is that important and how do you do it? And there are not that many of them, so it's not an easy process. So maybe talk a little bit about what that value add is, and maybe that's what attracts those kinds of founders to your fund.
Yeah, no, that's a common topic that comes up every time the Esteem Group is out here in Palo Alto. That's what we talk about. So to kind of lay the framework at the top, Unshackled, there's a part of Unshackled Ventures which is structured as an R&D lab. And at that R&D lab, we hire people. By being capable of hiring people, we are now in a position that we can sponsor visas. And we're not hiring everybody, we're only hiring portfolio founders. And so very selective approach, but think of it as any employed in the United States under our immigration policies has a menu of visa options to choose from to hire the right people. These immigration policies have been created to bring the best talent and to fill the job gaps in our economy, right? And so it's well documented that immigrants or bringing high-skilled immigrants is a way to create jobs, because you hire a PhD scientist and they will need to hire a few more people, and then the products they create scale, and you will need people for sales and support and engineering and everything else. So the way we look at the world is, when you are starting a company, your company is too young. It's 2 or 3 people, small amount of capital invested. USCIS, which is the agency under the Department of State that manages immigration, or Department of Homeland Security, that handles immigration requests, does not understand the concept of a startup. And so for them, a small business, whether it's a startup or a deli or a laundry shop, it's all the same, right? So they look at an application come in from a company with 2 founders where, both are on a visa or one is on a visa, and they're doing something. They say they're building software or something, but USCIS looks at it and goes, this is self-serving. You're just hiding yourself. And that's not the purpose of the immigration policy. These are employment visas. And so you need to be employed by somebody else, which is kind of the biggest reason for startups getting their visa applications denied, is because USCIS thinks you're creating a body shop to just hire yourself. Not true, but it happens too, right? There are service firms that the founders will create to just hire themselves. So instead of that, what we've created is the safe space R&D lab, where founders can be hired. They're doing exactly what they would do if they were hired at their own company, but they are under our employment. We now have used 11 different kinds of visas or green cards for these employments. So H-1B is kind of the poster child of employment visas, but then there's TN and E3, E2, E1, J1, O1, OPT, obviously, H4, EAD, and many that I'm missing. The point is, the law has a lot of provisions based on your country of birth, educational experience or educational qualifications, work experience, family status, and a plethora of other things. So what our team does, and this is where the team becomes really important. When we started Unshackled Ventures, we said, immigration is so core to us that we are not just a financial firm. We need immigration partners who are vested in the success of the firm. So we're the only VC who has immigration counsel as partners in the firm. That is so important, because they are vested in the success of our founders, right? Their big payout will be when these founders build big companies and exit. So that immigration team does all of the analysis, strategy, planning, and execution of the different immigration pathways for any individual who we're invested in. So the typical way the process works is, we meet a team that started at Notre Dame. Let's say it's 1 US citizen and 1 Irish citizen, and they are starting a company that's going to analyze that they're going to take in water data and create the most predictive or the best predictive models to run water treatment plants at lowest energy costs, mm-hmm. Right? So this team, if we're investing in, our immigration team will look at the status of the Irish co-founder and look at all of their history and say, here are your visa options. You can stay on OPT till this time. In parallel, we're going to start your H-1B, and we're going to file it at Unshackled, because Unshackled has a history and your company does not. And then we're going to start working with you on your O1. By the way, there's also this E2 that you can look at, and that's where we start looking into family backgrounds and stuff, if there's an option. So that's the way to get them working immediately. In parallel, we then start looking at the long term, which is, this is going to take 7, 10, 12 years to build this company. And OPTs are not going to last that long, and H-1Bs are not going to last that long. So what's your long-term strategy? So we start working on their green cards. Sometimes that means doing the perm process at Unshackled. Now, green card has its own nuance, which is, if you are a significant shareholder in a company, that company cannot do your perm process. It's not allowed to do your perm process. Mm-hmm. So which is why Unshackled cannot sponsor my green card visa, my green card. We've done green cards for a lot of portfolio founders, but we can't do it for me. because I'm a significant shareholder and a controller in this company. So those nuances, our team understands that. We've built a massive playbook, and that's why we have a 100% success rate on all of our immigration filings. So I hope that sheds a little bit of light on how we operate in kind of solving for this immigration. We're not creating new visa categories. We're not, going around the system in any way. This is just using the policy that's been set for any US-based employer to hire foreign-born workers. We're using the exact same things, except we're doing it with the very specific purpose of enabling entrepreneurs.
And just as diving on that a little bit, do you use the expense part of the fund to front that, and then that gets paid back as the founder gets it and exits? Is it kind of like a loan to them in some way?
It's nothing. So we invest the capital, right? That's how we acquire equity in the company, right? So if we invested $300,000 out of 3 million cap, we own 10% of the company. When the company exits, post dilution and everything, we get paid for that equity. And that's pretty much the only economic interest we have. All of the immigration lawyer fees we pay ourselves.
Interesting.
So we bear the cost of the legal fees, which depending on the type of the company, if it's just one founder who needs one visa application, is around $10,000. If there are more than one international or foreign-born founders and they need visa and the second visa and then green card, it's added up to about $100,000 for that startup. But that's borne by us. Founders don't have to pay a dime for that. The only cost that is paid by the startup that we invested in, usually from the capital that we invested and others invested, is the filing fees that goes to the government. So that's the only cost, which usually is about 20% or less of the total immigration cost.
Yeah, very interesting. So let me ask you one more question, then we'll get to questions from the audience. So all of the audience, if you would like to start sending in your questions, now would be a good time to do so. Again, just use the Q&A, not the chat, and we'll turn to those in a moment. But just interested in your perspective, Nitin, on just what's happening in the Bay Area right now. You know, we do a lot of very similar things as Unshackled in the sense of being a pre-seed fund that we run, very interested in underrepresented groups in terms of founders, but we're operating out of South Bend, not out of Palo Alto, right? And I've heard various things, and we have some experience in the Valley, but some people saying yes, it's still the place. A lot of people saying no, especially with COVID now. They're looking to move, they're looking to relocate, they're looking to do things in other places. For some period of time, the Midwest has begun to appear to be a hotspot for venture capital, at least in terms of valuations, if not in terms of total opportunities. But what's your perspective? And from Unshackled's perspective, is Silicon Valley a long-term play for you? Do you expand out? Where do you go from here?
So we are already expanded, right? So for us, we kind of look at the view as, where are the entrepreneurs? We should go where the entrepreneurs are, which is why I've been doing road trips and going to a lot of the, just call it entrepreneurial hubs, which connect very well to university hubs in the Midwest. My partner's been doing that in the Southern Belt. And so we are long-term bullish on spread of entrepreneurs or a distribution of entrepreneurs throughout the country. But we do not deny that there are significant network effects in Silicon Valley that are very hard to replicate anywhere else. Those network effects largely concentrate around two things. One, capital. A lot of the venture capital is controlled out of Silicon Valley. So if you are building a startup, sooner or later you will want access to Silicon Valley investors. But you don't need to be in Silicon Valley to get that access. Early on, you raise money from some Silicon Valley investors and they start building your network in Silicon Valley. So for a lot of our portfolio companies that are not Silicon Valley based, when they are raising capital, we are the access point, right? So we'll make introductions to the investors who are interested in their space. They set up the meetings, they'll travel here for a week or 2 weeks, do their meetings, go back. But there's significant advantages to building companies not in Silicon Valley, right? Yep. and so the fight for talent is much less fierce anywhere else. The cost you pay for talent is much less anywhere else. And so there's significant benefit. The second part is the second network effects that are strong in Silicon Valley is the entrepreneurial community. A lot of kind of building a company is you want to not make the same mistakes that other entrepreneurs have made and learned from. So if you can learn from other people's mistakes and avoid making those mistakes, you're giving yourself better odds of success, right? Make new mistakes, which is totally fine. But if you have the opportunity, learn from other people's mistakes. And I think that's one of kind of the undersaid parts of being in Silicon Valley is the odds of your success are increase a little bit, not because access to capital, but because you're limiting the number of mistakes you make, which are in the form of you spend time doing something that someone else could have told you it's not going to work, but you've spent a part of your runway on that, right? And so those two things, as of right now and in near future, I still think there's heavy concentration, but they both are solvable if you start building a network with Silicon Valley, either because, for example, what you guys do with the Esteem program and, and with Idea Center as well, you build relationships with VCs. And so when you're investing, if you engage some of these Silicon Valley VCs who are pro-investing outside Silicon Valley, their networks now become a network of your portfolio companies.
Right.
And so some of the initiatives that I've been working on with VCs in the Midwest have been around, let's get you involved in some of our portfolio companies, get us involved in some of your portfolio companies where specific strategies make sense. So for example, Akron Fusion Fund is one of the funds that we've made a few co-investments with now. And so any of our portfolio companies that have enterprise clients in industries that are strong in that Northeast Ohio region, we invite Akron Fusion. The portfolio companies make room for them to make an investment because it's access to customers in that region.
That's right.
Right? You have a lot of polymer companies, manufacturing, healthcare that is strong in that region. So we got to use the lens that I use is what's the strength for your region? Let's use that strength to build network effects of your own. So when I work with people in Pittsburgh, it's a different playbook. I'm working with folks in Tulsa, Oklahoma, it's a different playbook. And so we have to leverage our strength today in any of these hubs and use those to attract startups who will let you invest in their company. That's how you start building a network. And similarly, for startups that are based in South Bend or anywhere, you want to start building that network to engage people from outside your community. And that's how you get more of a spread, more of an access to both capital and knowledge.
Yeah, that's a great point. In fact, we've recognized in our own efforts how important that network is, and we're fortunate that our network extends across the world. But it also goes to show how important it is to do the one-on-one connections, like our fund with Unshackled, for example, and connecting those two things together turns out to be really important. Let's get to some of the questions.
Just a tiny note on that. One of the big advantages in the Midwest that I hope more capital allocators start using is capital is a big pull. And you have great enterprises, great universities, endowments in the Midwest. And so if Centrifuge, for example, is a model that's working well in Cincinnati. And so similarly, if allocators of capital start using that pull to say, we are more likely to invest in startups or funds who have an affinity towards the Midwest, you're now naturally attracting people. So they want you to be an LP. You want them to bring their startups to your region to expose the strengths of your region. And it's not about just getting a startup or a founder to be now based in South Bend. It could be a second office.
That's right.
Or your engineering R&D center. Right. And that starts the knowledge transfer, that starts the network building. So there's a lot of different ways to do it. I still think like it's it's not a great approach to say Silicon Valley's dead. You know, the future is not Silicon Valley. I think that's kind of, you're ignoring the hard facts in front of you.
Totally. Fantastic. Well, let's start. We have a couple of questions here. This one from Shaban. He says, he's asking, some of the customers works with our locals who work in partnership with immigrant entrepreneurs. Can you share briefly some of the best practices that work to get immigrants to come out and connect with the community without fear?
Yeah, it's hard, right? It depends on what kind of immigrant we're talking about and the specifics of the individual. So speaking, for example, from my own experience, when we started Unshackled, a lot of reporters wanted me to share my story and, you know, talk about the policy. And obviously they were looking for me to say something stupid about the policy. And I wasn't comfortable doing that because I was like, I don't want to fight that battle. And I think there's an element of a lot of our stories are motivating and inspiring, but we want to share them at the right time, because if an element of sharing your story is it brings the limelight to you, and if you're not comfortable with that limelight, and a part of that limelight could be negative limelight as well,
right?
Especially in an environment like today's, which is extremely charged. You know, we know for obvious reasons the country is more divided today than it was 4 years ago. And so in that charged environment, you have to be, I think it's important that you understand the risk that you're exposing yourself to by being more open and vocal. If you are capable of taking that risk, for sure, take the risk because you're going to inspire people. But if you're not, I don't encourage people who are themselves not comfortable to do it to go out and do something that puts them at more risk than they're comfortable with.
Yeah, very interesting. So here's another question around the immigration side that is a little nuanced. Where's the cutoff? I mean, if I already have a green card, do you still work with me? What about areas of the world in terms of specific kinds of immigrants? Is it worldwide? Is it specific country?
I'm glad you asked that. So from a pure thesis standpoint, our strategy is to invest in immigrants. The definition of immigrants is either you or your parents were born outside the US.
Oh, got it. Okay.
Not all the founders of a company need to be immigrants. If one or more of the co-founders are immigrants by definition, we would look at that opportunity. Now, that's not to say that if you are not an immigrant, we would absolutely not look at it. There's a reason why we specialize in what we do, is because there's 1,000 other funds that invest in every opportunity. And there's only one fund that invests only in immigrants. But if we see that so an example of that is we invest in a company called Bluefield, which is founded by an Israeli and a Canadian co-founding team. One of their advisors is Charles Miller, and his team is all American citizens at his startup called Link. Because of our experience getting to know Charles through Bluefield, we invested in Link because we saw a significant strategic benefit in doing that. That's not the norm though. So I would say just from a pure, do we qualify or not is a less important question. The more important question is, do we, one, see that investing in your startup is a phenomenal opportunity, and two, can we convince ourselves that this is not adverse selection, that we're not investing in something that everybody else has passed on, and that's why we're getting this opportunity. So we look for what is the unique reason the founder wants us to be an investor in their company.
Interesting. So, and extending that to specific industries, is there a specific segment or thesis in terms of type of company you're investing in, or are you investing broadly?
Pretty sector agnostic, and also a part of your previous question was country agnostic as well. So so everything outside the US is non-US. So we have founders from 25 different countries now. including, countries that you would typically expect, the India, China, Israel, and then, countries that you don't often hear about in terms of entrepreneurship, such as Nepal or Iran, or Kenya. And so we're as diverse as our US system is, and that's because a lot of the importing of these immigrants is happening through the school system and the corporate system, and those systems are very, very diverse, right? So we get the benefit of that diversity. To your question about industry, we invest in hardware, software, healthcare, space tech, materials, everything that can scale at venture scale. So what we would not invest in is things like services or consumer products. But outside of that, we're pretty industry agnostic. We tend to look at the future from the founder's perspective, so we're not biased by our own thesis about the next big opportunities in X space. We instead let the founder drive our thinking on there are big inefficiencies and therefore big opportunities in this particular area. Then we go and educate ourselves about that area, which we're able to do pretty quickly because of the large community that we've built of entrepreneurs and operators around us.
And if you were an immigrant founder listening to this webinar today or a podcast later as we send it out, and they wanted to get in touch with you or get connected with your network, how would they go about doing that, Nitin, in terms of just presenting their opportunity to you?
One of the things we learned about immigrant founders is they don't always have warm connections to people in Silicon Valley. So we created an open forum on our website, which anybody can share their pitch or information with us. At least 2 people in our firm, usually 3, look at everything that comes through this forum. So in our evaluation, a warm introduction and a cold shared information through the website carries the exact same weight. So if Brian, you make a warm intro to us and you tell me, look, Idea Center is investing in this company, we will still ask that founder to fill the same form so that at the beginning of the process, everybody's starting at the same point. Awesome. Now, as we get into diligence, I may then ping you back and say, Brian, you've invested in it, can you share your thoughts on this? Which is the same as if someone came in cold, we would still back channel information on those founders and do our diligence. But for us, a cold intro and a warm intro carry the same weight as far as evaluation goes.
Fantastic.
And then you can, if you have questions, you can email us through our info@Unshackled VC email. You can find us on LinkedIn, Twitter. I respond to Twitter DMs. I do not respond to LinkedIn messages. They're a mess. Twitter DMs are not a mess yet. We're 6 team members. We all have our own networks and things that, we engage in, or media channels that we engage through. So it's not hard to find us. We understand that our audience will not always have warm intros to us.